Before we go to Nick, I just wanted to make a point. Colt's Luck here saying big money on vacation, and that's a good point here as well. You wonder what's going to happen here because August, there is some movement in August sometimes because the liquidity is lower here. But holy cow, if you're an institutional money manager on vacation, you come back next week after Labor Day. It's going to be interesting to see what happens then because the volumes usually do pick up once you get after Labor Day there. So it's a good point to make here, and it's going to be interesting to see what the big money does after. But I think a lot of the big money maybe came back from vacation early when they saw this volatility.
All right.
Can I go back on vacation?
Yeah, you were on vacation early enough, Nick. You were smart. You went early in the summer, so you're actually able to trade these markets here. And how are you approaching this market now? I mean, we're just looking here this morning, and we're kind of confused. And usually, we come in and we have a pretty good opinion on where we think the market is going. But both Joel and I are, we're looking at it as okay, it's a nice pullback to buy. But then we look below, and all those lows are so much lower there. It's hard to jump in here.
Yes, I was getting ready to say happy September and good riddance of August, but that was premature for sure. Well, every day in every write-up I've had, I said you treat every pop as an opportunity to fix those trades that got hammered last Monday and you couldn't do anything about them. They were underwater, and get rid of them, and also to buy protection, and also to shore up, and also no new fundamental trades because the fundamentals are not in play. This is sentiment trading and headline trading. And I don't know where the next headline is going to come from. We do have the candidates. We have China. We have the September 20th election in Greece. We have our own debt ceiling debacle, which will probably come up soon enough. And we have the rate hike. We have all kinds of stuff to worry about. I'm not calling for any of these to be disasters, but they are headlines, and if they hit the ticker tape of the media, then we will move on them. Case in point, last Monday's flash crash. We need a new cute term for it, by the way. But what happened is, can you tell me, I can tell you for a fact that Apple did not lose 15% worth of ability to produce dollars, yet it dropped 15% in a whoosh down in seconds, and you can say that across the board to hundreds of companies. So it's not fundamental trading. And if it's not, I'm a fundamental trader. I can't do anything with that information. I'll just sit on my hands and shore up my portfolio. And I did come into today short. Not as short as I want, but in hindsight, but I am short. And I will not treat the bounces as opportunities to go along unless I see another drop like on Monday, and hopefully we don't see that. But even then, I wasn't able to trade. My platforms were locked up, so I don't know about yours. Very few platforms were working that Monday open last Monday. So what tells me that this is a bottom? Nothing. And the fact that we actually dropped 10%, 15% is not reason enough for it to be a bottom. There is a green shoot, which are the small caps. They are holding up better, and they are better behaved because they are not whipsawed by mega caps. So the fear is distributed evenly. All the companies are almost treated the same. So you really see, quote, market moving. And for days now, they are moving less than the broader indices.
And with your short positions, if you look at the charts here, you look at the S&Ps, you look at some of these charts. Are you going to rush out and cover these things on the open?
I don't have the way I short. I don't need to rush and cover them because I either buy puts or put spreads or sell credit call spreads way out in time and way above now, or both. And in this case, I did both. So the puts are kind of free if you want to think about it that way. The only cost is the risk on the upside run-up. 8% from here, I'm not too worried about it. So, I have time. I'm not rushing to do anything.
Okay.
The way I short, I don't sell short, open-ended, the way some people tweeted out. I sold the NQ right now for a trade during the day. I can't do this. It's not my personality. I prefer give me a set of circumstances and I'll plan around it, as opposed to let me try to time this move up and this move down.
Yeah, very difficult to do. Well, do you feel like pressing into something like this? You know, a down open, you got the mo going your way a little bit, or I mean, you always surely know that. I mean, there are going to be, no matter what happens in a trading day, there are just going to be some rip your face off rallies. I mean, is this one you think they'll just
Yeah.
tag it from the
That,
open, or wait for a little rip and then put some more on?
Yeah, but what I don't do usually, I don't do shorts on days like today. I don't add to shorts unless I absolutely need them somehow, because you end up selling at a discount, so to speak. And I'd rather, if I want to defend a portfolio, I'd rather buy puts. And it's never too late to defend a portfolio. And some people are worried about losing money in the defense. Like, what if I don't need it? What if you do need it? Which is a better answer? I'd rather lose money defending a portfolio, a sizable portfolio, than to actually say, I'll wait to see if I need it. It's like kind of, I'll wait to see if I'm going to have an accident before I buy the insurance, and then by then it's too late. But here, even though the VIX is going to spike, the premiums are going to spike on the puts, but you can stop the bleeding by buying the put. And then you can decide whether, okay, was it stupid to buy the puts? It's never stupid to defend your portfolio. It's stupid not to. That's my opinion. And as far as rip your face off rallies you mentioned, I've been saying since last week, the two strongest days were based on oil. And that was a fake move, because oil is fake prices right here. I heard you say earlier, I think it was Dennis, that you were trying to invest in oil and oil companies. How could you? Not to be too blunt about it, but it is a rigged market. The prices are fake. I cannot invest fundamentally, maybe on a trade, yes, but fundamental trades in size, it's just too close to gambling. It has a lot of a gambling element. So I prefer the fundamental trades, and I think money will run into good fundamentals and will ditch the good stories. So Tesla is a good story.
Just to clarify my point there too, wow, we're really
whoa.
Yeah, we just had some vacuum or some stops or something on the S&P, but yeah. So I was looking at it not so much from an investment standpoint, but some of these oil stocks I was looking at, they've really had a pop here, and I think you've caught a few people short. And I'm saying on the pullback here, maybe some of these stocks that actually have been beat up pretty hard, maybe that's an area where you can maybe look to buy the dip, but definitely not from an investment standpoint, only for a trade, knowing where your out is, because I don't know from an investment standpoint, it's tough here right now. Like sitting back, I mean, maybe this is usually, and historically speaking, it's usually the best time to jump into some stocks, when you're getting beat up from an investment standpoint. But with such a rally that we've had here, rip roaring rally, really from just the last few days, from those Monday lows only 6 sessions ago, I feel like I'm buying a premium right now.
Yeah, it definitely is. So yeah, from a trading perspective, yeah, you can probably trade it, but fundamentally, I would stay away from anything that's like that. Even though their fundamentals are like Exxon, good fundamentals, good company, good cash flow, good balance sheet, good everything. But when its dollar depends on an economic war, and people are firing bullets left and right, I would stay away from it until it stabilizes a little bit. As far as what scares me most about this market, it's not the actual fundamentals, but the level of scare. People are not scared enough. And case in point, last week when we rallied after the flash crash, there was a whole bunch of money coming into perceived fraud. And not until, I think, yesterday where I saw a good selling in perceived fraud, heavier selling there than in the traditional value companies. So maybe we're starting to price out some of that. So that's why I'm saying if I were to catch a falling knife, I don't want to catch a Baba or a Baidu or a LinkedIn or a GoPro. I'd rather catch, like if I see Apple at 92, I'd rather try to catch that for a trade rather than a big dump in Tesla. Because in the medium term to longer term, it's better to catch value. At least you have some value as opposed to try to catch $200 worth of frost before we find out, okay, there was no value, we're buying a story.
Yeah. I prefer the value investing here too when you're looking at the stocks that actually have good earnings, have maybe a decent dividend. I think, as the market gets more conservative, you got to think, when money rotates around, it doesn't always just leave the market. It usually goes from growth to value. And I got to think there's a few people who are sitting, on some growth stocks there and have been getting hurt, and they might be looking at the value stocks. So that's why I still think like a stock like Apple is probably still a decent bet.
Yeah, and also today's price action, like this morning, if we don't have another mechanical breakdown on Monday's, like Monday's open, last Monday's open, I'm looking at bonds rallying, rates dropping, VIX spiking, but the bonds rallying and the rates dropping tell me that people today are not worried about a rate hike. So maybe that's the good news they're not thinking about. That if we've had economic bad news in China and Europe, which I think was the jittery parts this morning and some currency moves, then this is good news for the equity markets because it almost assures the rate hike delayed from September. So if they wake up to that fact, they, as in the markets in general, and they see rates dropping, that means they're not raising rate. They're pricing out. They're pricing in the delay. Does that make sense? So there's no chance that they're going to raise the rates in September if really the economy is looking this bad. And today's economic data wasn't good.
And we have some more data coming out at 9:45 and also 10 o'clock. So, you see a lot of red here. Just keep your eyes here. Anything could happen. Eyes and ears open. Going into some other stocks here, GoPro, we have a trader in here, came in short GoPro, pulling back along with the rest of the market. I mean, do you put GoPro in a category of a stock you'd be interested to try and buy in a pullback, or is this one a little bit too much momentum stock for you?
No, I actually just sent out a note that I have a hunch that it could, it could be under 40 fast. I don't know exactly where it is this morning. I think last it was at 46, and I said, 35 to 37 could be a target if it loses the 47.50 area because it seems to use it as a floor for the last few months. And I'd be afraid for that. So if I'm long GoPro and I'm green, I would book some profits. Obviously, this should have been said yesterday. And I also was short a few frothy names via puts and also the markets in general. I bought some puts in the Qs and the SPYs and sold some call spreads in the SPX. So I was short, cautiously short, not overly short. I you know me, my whole portfolio has been short for months. And I should have, replenished and doubled up on everything, but that's hindsight. I did the right thing by not doing that. But now I use the pops that are not based on fundamental news to reshort and add to my shorts via credit call spreads, which are cautious short, which is also cautiously optimistic because I leave a lot of room for upside. It's not like I short right here.
The GoPro chart is interesting because here's one that is actually potentially going to test its Monday low here today because we're only 75 cents away from it. I mean, so many stocks are way off their Monday lows. Well, this is one that actually could potentially test it here. There isn't a lot of charts that look like this one. Do you think, are you more inclined to go long something like this because, it's actually retesting that Monday low, or you're still hands off on going long anything like this?
I have a box around 35 for it. 35 to 37.
So you're still long term. You might bring in a short, but long term here, you're still thinking lower for this one.
My sense is that if it loses that 47 area, that was my chart last time I looked at it, which was yesterday actually, and I drew a box around the 35 to 37.5 area if it loses the current green box, which was around the 45 area, so it's definitely losing that box. So we'll see what it does in the open market. But I am not going to catch froth. If anything, I'll dip my toe into long Apple via debit call spreads or long dated calls, or at least I know there's a floor to it. I don't know how much of that $30 or $35 in GoPro's actual story and what is actual earnings strength. So I've seen a lot of cameras on the market that are pretty darn good, and give me another story to chase, but not in this kind of a market. This is the market where you actually, I'd rather buy fundies, fundamentals and not stories.
Moving on here to some other issues here. And I just Alibaba here. You've been very cautious on that one. Is there anything in here that would make you go in for a trade? Did get a bounce, pulling back, old tired to the China syndrome. Still hands off on Alibaba.
Alibaba, when it lost 75, I said it could hit 70 or 68 fast. Boy, it passed that and then some last Monday, and now it's about it's just a little bit lower than my target. I need to see more. This is one where it's kind of stuck in between. They actually produce dollars, but it's tied to China. So I told my members that hands off of Alibaba and Baidu just because they're going to trade in tandem with China. And since China is a big question mark as to what's going on behind that wall, I can't commit any money to it because it's going to move not on its fundamentals and the market sentiment, but also on the Chinese situation from the market perspective, from the growth perspective, from the what's going on perspective. So too many question marks. There are surer plays out there than me to have to chase Alibaba.
All right, I want you to look at a chart here. I don't even think we've ever asked you about this stock. What do you make of the chart of J.C. Penney, JCP? I mean, I kicking myself. I should have went home. They trade options on this, right? I mean, I don't know. Look at that move here with 772. Got over $9 yesterday. Last few times this thing has got up over 9, it's just giving it back, and now it's just coming on a 2-point rip. Any take on J.C. Penney?
Well, I don't trade it. I have watched it from the news perspective, and the funny part is if you draw a 2-year chart and you draw a channel, you can kind of loosely put a limit at 9.5 and at 7.5, and it's a sideways channel for 2 years. I would not chase it here. It is at a top that has failed several times before. And not to say that this time it'll fail. If it will break it, it'll be at 1050 and even hit 11 the next couple of months easy. But don't tweet that all by itself. But it could also prove a failure level again. Now, having said that, if the markets in general stabilize, then the upside potential or the upside outcome is likely because then it'll just be lifted with the market. So it could have rallied sweetly. I don't know what it's doing this morning. I don't have it on my watch list in front of me. But if it can withstand this drop this morning and markets actually stabilize and recover to the mid-1900s, then this could have the potential to break out. And for a trade, it wouldn't be too bad. But from a price action, this is the top that's been the top for a while, except for a little poke.
Right.
In September 14th.
Yeah, Deutsche Bank up. Before I let you go, Nick, I know you're one of our fundamentalists on the show, and you've been maintaining a tired bull market for quite some time. What would need to happen for you to classify this as a bear market, that we've turned and that this is an all-out bear market?
I don't know what the heck that means. Do they define it as a certain percentage drop, or I just trade whatever prices are in front of me, and if I cannot clearly see the price limits and the ranges that are in front of me, I don't trade. And the fact that we moved 10,000 point travel last week created price elasticity. So what that means is that now markets can move in bigger chunks easier for the near term. It's like the pendulum swing. Until they settle back down, I avoid big fundamental trades. So if bear markets mean that we are going to whoosh down 300-400 points every other day for no reason or for a very small reason, then okay, if that's a bear market, I will reduce my trading and try to close out my year as good as it's been so far, luckily. So for me personally, I am beating the market by a mile, and I'd like to keep it that way. So if worst case scenario, I'll just close out the trades and take a vacation for a couple of months and still come out way, way ahead of the market. So I really don't know how to answer this one.
Okay,
because
that's a good answer. No answer sometimes a good answer. Nic Chahine, Marketfy Maven, joins the show every Tuesday to discuss this week's options outlook. Take a look for his product on Marketfy, create income with option spread. Nick, thanks a lot. We'll talk to you again next Tuesday.
Looking forward to it. Thank you.